Hi everyone, hope you're all doing well. Sorry about the intro today. Normally I do the whiteboard video and then I cut to the video, but today I just don't have time. Work's been a bit busy, and as well as that, I've got my big coat on and I'm not taking it off. Absolutely freezing, so I thought if I sit down, do the video there, I don't have to take my big coat off and I can stay a bit warmer. Too tight to have the heating on all the time, you know. We've got to be putting that money into stocks. Can't be putting it into funding the heating, can we? Especially with how much energy bills have just gone up. We'll take a look at that UK inflation in a second. But yeah, going on today's video, a lot of stuff to talk about, a lot of different subjects, and also talk about the stock market yesterday. Really good day in the market yesterday. And then obviously we've got some of the stuff that's going on with the Ukraine, Russia, US at the moment, inflation data that's coming out at the moment, target earnings have just dropped and they're being terrible. So yeah, a lot to talk about today. Before we do that, yesterday I dropped a video on B&M. I said that I don't always do these videos because they don't do that well now and it takes a long time to put them together. So yesterday that B&M video took like 4 hours to put together, and I said it probably won't do that well, and as you can see it was like the 9th out of my 10th last performing or worst performing videos. So yeah, it just shows you like I do like doing them, and in my opinion these are the best videos. You know, you get the most detail out of them. But the only problem is they never do well. So I'll go give that some support, because I do want to keep those sort of videos going where it's like a big deep dive into a stock. As well as that, Black Friday is still going on until the 1st of December. There's 35 of you guys now that have signed up to that, so it's been really popular. So if you do want to get that and get onto the Discord, and you get 2 exclusive videos a week on there, £44, send me an email, jcarinvesting, and like I said, it's normally £72 for the whole year, so you're getting a really good private group in my opinion, a lot of exclusive content out there, a lot of really good investors to talk to, and it's £3.40 a month, which is not that bad at all, and it supports the channel, supports all this content I give you guys for free as well. Anyway, yeah, getting on to today's video. So I looked at the stock market yesterday, and I was quite surprised the stock market did really well yesterday. When I saw the news about the whole Ukraine and firing rockets into Russia, and there were US made rockets and Biden allowed it as well, I was a bit like, I don't want to go too political with this point of view, because it does cause a lot of drama in the comment section. But I was quite surprised because the market reacted, you know, quite well. At first it opened up quite negative, and then it recovered and it actually did quite well, and I was surprised by that. I thought it was going to be a bit of a red day in the market, and I'm surprised the market didn't take this more seriously, because I looked at this and thought this is quite a big escalation, where, you know, the US is allowing rockets to be fired into Russia from Ukraine. Like, they've given permission to do that. I know. I always think, you know, a lot of people always stare at Russia and go, Russia, you know, you keep doing this wrong, you keep doing this wrong. But there's always sometimes, you know, you look some of the things from the UK side, some of the US sides, and you see a lot of double standards out there. And I guess that would be the summary of the current UK government, is I would sum them up with double standards. And I look at them and think, well, you know, you're trying to, you know, calm down the situation, not escalate it, and you do things like this to escalate. You know, you can act all innocent, but I think, like, you got to be really careful. And I don't know why the market didn't react more negatively to it. I don't know if they're thinking, well, let's hope that, you know, Biden's days are numbered now, and when Trump comes in, he's able to calm the situation down. Maybe that's why the market kind of, you know, calmed down to the situation. But I expected a lot more of a red day than that. But it was nice, because what it did mean is that the stock market flied. My account was flying. All-time highs again in the portfolio, which is amazing. And a fun fact, obviously you guys on the Patreon and Discord know, this month just gone is the most profit I've ever taken out of my account, and it's the most profitable month I've ever had in the stock market from the amount of money that I've sold and made on the stocks, which is really good. You know, I look at this year now, and it's been you know, 2023 was a good year, 2024 was a good year, and I look at 2022, and there's a lot of new investors in the market, kind of got started in 2023, 2024, and they're like, oh, this is amazing. You know, I just buy the stocks and they just go up every day. And some of us that are like still seasoned from that 2022 drop, we're like we're just about, yeah, it's a nice recovery, but I'm still recovering. I'm still having therapy sessions after that 2022 drop. You know, it's just so totally different from where we were 2 years ago. I mean, it's better, isn't it? You know, I so much prefer making videos and coming on here and going, hey, look at this stock that's up this much, compared to when I had to come on the YouTube channel in 2022, like for a whole year and a half, and I was like, it'll be okay, honestly, it'll be okay. And I was thinking, this is getting bloody bad, is this? You know, I remember, you know, 2022, I was, and I think at the end of the year, I want to do a bit of a recap about the last 2 years as well, towards like Christmas time. When I've got a bit more time, I'll sit down and do that. But I remember in 2022, like, I bought the house that me and my missus have moved into now, and I was like, the stock market's getting a bit brutal. I was like looking at the house we were buying and thinking, you know, will I need this money? Like, if we're going to have a big major drop. I thought, no, bought the house. And then eventually I was looking and seeing the market go down. I was like, I need all this money now to go buy all these dips that's going on in the stock market. And I remember, in 2022, the amount of overtime I worked, any hours that were going at work, I was like, yeah, I'll have that hour, I'll have that hour. I remember I was working so much every night, and it was tough. And I was doing it just so I could have so much more money to go buy the dip. And now I'm quite happy because I can look at the gains that are coming in, and like, it's nice to see some of the gains coming in. You're seeing all the stocks that are coming up, and we'll have a look at them some of them today, because and a bit of a recap what's kind of going on with some of them. And let's start off with number one, DraftKings. Technically, DraftKings is not my largest position anymore. It's now my second largest position. Hims has overtook it because I have been actively buying Hims on the drop. But DraftKings is my second largest position. It's nearly joint first, really, to be fair. But yeah, it's been on a good run. Up 2% yesterday, up a bit more in pre-market as well, and it's been on a really good run. Up 53% in total on DraftKings now, which is great. I remember making videos about this and people saying it was going bankrupt when it was $8. Had a bit of a rally off. It seems like there was a bit of a lift from the Mike Tyson and Jake Paul fight. Seemed like there was a big surge in in betting. I think 60 million households watched it or something like that. So yeah, the fact that that did that well maybe is a bit of a surprise in DraftKings Q4 earnings. They're like, oh, lower the guidance maybe. This is maybe a bit of a lift that maybe now will help them beat numbers. We'll see. But the reason why they did actually really well off this was that DraftKings came out as the best downloaded app during this time frame for the fight, which was really good. DraftKings, in my opinion, have fallen a bit behind FanDuel this year. I think FanDuel have had some really good partnerships this year, and that's made me a bit nervous about DraftKings, is that they're not being signed as many good partnerships as what FanDuel have. But they had like the exclusive, like it was everywhere. It was sponsored by DraftKings if you watched it. So that would obviously hopefully help them out a little bit, and obviously in the downloads as well, and maybe gives them a bit of a bump up as well going forward. So good news from DraftKings there. Hims and Hers, that's having a bit of a rally out in the last kind of couple of days. Obviously had the big drop off like the Amazon news, and since the Amazon news, in my opinion, it was way too sold off. I made a video on it on, what was it, Thursday or Friday? I said like, this is a bit too sold off. And the buyers have come in. The stock has rallied up 21% since that time frame. So a few buyers have been coming in and buying the dip. Personally, for me, I've been one of those buyers as well. So yeah, I think that it was just overblown, and I think like everyone just follows the trend, don't they? It's a roller coaster stock at the moment, which I don't like about it. But there's a lot of day traders, and that's probably causing the big volatility in the stock. But yeah, I think people panic too much, and maybe stuff like Bank of America with their downgrades, that they're all over the place. It does make me laugh. Analysts, when I don't know why people take analysts so seriously. When they have a better than 50% hit rate, then we'll take them a bit more serious. But until that point, we won't. I mean, the fact that I'm here in my office at home, and I reckon I've got a better track record than all these analysts. I reckon my hit rate's probably around about 80%. So if I've got an 8% hit rate and these analysts are getting paid how much to cover these stocks, and they get it so wrong, I still don't know why people follow them at all. Mercado Libre putting a little bit of recovery in since earnings. We're up, by the way, we're up 247% on Hims and Hers right now. Mercado Libre, we're up 61% up at the moment, and a little bit of recovery still coming in from earnings, which is good to see. I did buy the dip on earnings as well. PayPal still doing okay. I looked at the drop off in earnings, and I was like, I didn't like the earnings, and obviously the stock has just continued to rally in PayPal. So yeah, I'm surprised by the rally that happens in that one still. Up 17% and up 48% on that one as well. Sofi, wow. Sofi, it just keeps going, doesn't it? I think we're up 110% on Sofi now, which is obviously really good. Up 3% yesterday, up nearly 1% in pre-market as well. And in the last month, up 38%. What a performance from Sofi. And I still see it quite now. I've said this on the YouTube channel so many times about Sofi now, is that people keep saying, oh, well, it's overvalued now. It's gone up this much. It's overvalued. And I disagree. I think the stock was stagnant for so long, where the stock hardly moved for like a year and a half, but yet the fundamentals just got better. We just see them improving in the right direction, profitability going up, revenue going up, and all the fundamentals were moving in the right direction, and the share price just didn't reflect it, and now it's finally reflected it, and the thing is that it's reflected like, boom, that happens sometimes in the stock market. Eventually, also then Wall Street, for some reason, just goes, yeah, actually, we should value that maybe a little bit higher, and then it absolutely surges, and that's what happens with Sofi. Realistically, when it was down at these sort of levels, it was like 20 times forward earnings, and a stock like Sofi should not be 20 forward times earnings when it's doing the numbers that they were doing. You talk about a company that's maybe growing 3 or 4% a year, not what Sofi numbers they've been putting up. So yeah, people keep saying like, oh, well, it's overvalued, and I go, no, in my opinion, I think it's just starting to finally get fairly reflected of where it should be, and it is there now, which is really good to see. I think I said a few months ago actually on YouTube. I really should look for this. I said, I talked about can SoFi come $14 by the end of the year, and I said if they blast the Q3 earnings, they can do it. And obviously we're here now, which is obviously fantastic. So for any of you SoFi shareholders, another probably a bit of a boost. SoFi CEO Anthony Otto, really good speaker if you ever go listen to him. He actually did go on Mad Money on Friday, so that probably put him in front of some investors and maybe help the stock go up a little bit more. SoFi, another large position in my portfolio, that's absolutely flying as well. Really good performance from SoFi from their earnings. Meta still performing very well quietly in the background. I think, you look at Meta's valuation right now at 26 times earnings, and it's still actually not too bad value, especially when you think the company's like growing at nearly 20% a clip, going forward. That's actually okay. But yeah, overall, I've gone through there my 1, 2, 3, 4, 5, 6, 7 largest positions in the portfolio, and as you can see here, really good. If you took me back, into 2022, and you said, don't worry about it, in 2 years' time, you're going to be making a video on YouTube, and you'll be going through your top 7 positions, and DraftKings, which was like $8 at the time, would be $43. Hims and Hers, which was like $3 at the time, is now $23. Mercado Libre, that was like $700, is now $1,900. PayPal, which was like $50, $60, is now $84. SoFi, which was like $6, is now $14. Shopify, that was like $50 or something like that, is now $104. And Meta, that was $80, is now a $561 stock. It just shows you, doesn't it, sometimes? It just shows you what time does and what panic does in the short term. Panic in the short term and how low prices can get, in that situation. I was thinking the other day, imagine if Russia was ever to fire anything back into the US overnight. I don't think it will happen, but if it did, imagine how much the market would get spooked by that. And once again, so quickly you would then go, oh, I don't see the days of DraftKings ever getting to $8 again, or Hims and Hers getting to $3 again. And very quickly, it shows you how much panic takes over and takes it down to stupid valuations. We've had it twice in 4 years. We had it during COVID, and then we had it during 2022. So if anything like that could come out of the blue again, and it would absolutely spook the market, and we'd be back at really low prices. I mean, the concerns would be around World War III, don't get me wrong, but it shows you like how much panic can take prices lower, and then all of a sudden how much I guess greed as well can take it a little bit higher. But obviously, for you guys that are new to the market in maybe 2023, 2022 or 2024, you guys are thinking, oh, this is great, is this? But trust me, some of those guys that have a little more wrinkles around the face with the amount of stress that this caused us during this time frame, we're all thinking, we're always ready now. We're always ready for the opportunity and how stocks can go up and how fast they can go down. And maybe I should have worked a few more hours in 2022, even more overtime to buy even more of the dips. But I'm happy now. I'm really happy with how the portfolio is doing overall, and how it bounced back, and obviously stuck all the way on YouTube and showed you guys that. I showed you that some stocks didn't make it, as you guys know, and unfortunately they had to be cut, which I showed you. And obviously I showed you all the way that I was buying DraftKings at $8 and Hims at $3 and PayPal at $50 and SoFi at $6. So hey, it's funny how it goes. UK inflation came out. It was worse than expected, or higher than expected, 2.3%, so obviously a big increase from the 1.7 up to 2.3. We knew there was going to be a bit of a jump, which was disappointing. Obviously, prices are increasing a little bit more, probably a little bit of fear around the current government, and also energy bills rising, which once again is disappointing because, the current government that came in, one of the big things that they said they were going to do is make sure that households aren't hit with higher energy bills, and they're going to do with the renewable energy. They're going to make sure that they're going to tax windfall on some of these energy businesses and then pass it on to the consumer. How much of it happened? Zero. So, I mean, there's definitely a lot of politicians out there that don't tell a lot of truth. Nearly every single party, I would say, at some point has said something that wasn't true. And unfortunately, the same continues with this one. And yeah, if we could ever have an adequate government in the UK, it'd be really good, because I think the UK has a lot of potential. We just generally have people that don't know what they do. I don't know if they don't know what they're doing or if they're just making bad decisions. I mean, I don't think they're necessarily making these decisions because they think it's going to go wrong. I think that's probably a key thing to say, but it is. So clearly, either they just don't really have an understanding of how things work in the economy, or they are just believing that they are doing the right thing, but and not really getting there, which is disappointing. So yeah, any of those interest rate cuts that we thought we were maybe getting in the UK, I think it might be on pause for a little bit longer. And the last one, Target. Target's just come out with earnings, down 18% in pre-market again. Another one of Jeremy Lufufu, financial education. Another one of his stocks that he picked, gone very quiet on this one again. Very surprising. Probably one that's been silently sold out quietly in the background. Yeah, it's funny how that dividend portfolio suddenly disappeared from the public site now. But yeah, obviously not great for Target numbers. The numbers are pretty poor, to be fair. EPS was down a fair amount. Revenue was 1.1%, and that was a pretty decent miss. Yeah, it's not good numbers from them. At some point, maybe probably is a buy. I'd probably have to have a look into it and do some number crunching about what would be the right value to potentially go buy Target. I couldn't give you that answer today because I've not done that, but it was actually $100 in 2023. So I'd be saying, like, if the consumer environment isn't still that good, I definitely wouldn't be considering Target unless it was back down at them sort of levels. So I think that probably it would have to get a little bit cheaper from here if I was to consider buying it. But I don't know. I would have to probably confirm on that and run the numbers. I don't want to look at a stock chart and go, that's where I'd buy. But that would be a suggestion where I think the last time Target was tempting was probably them sort of levels. So you probably have to have a look around then and see what the good value would be for it anyway. But would you want to see a video on Target? Let me know anyway. Apart from that, that's the video for today, guys. Hope you enjoyed it. A lot of subjects, a bit of reflection, some concerns, I guess, some individual stock talk, UK inflation, Target, and everything like that. Hope you enjoyed it. And as always, if you do want to join the Discord, join the Black Friday sale, send me a link, jkinvesting@gmail.com, and I'll whiz you a payment method over, and we'll get you on there on the Discord and Patreon, guys, for £3.40 a month, which isn't bad at all. Hope you enjoyed the video, guys. See you in a bit.